Look at how good the quality is from this webcam.
You need this?
No, you can put it. Hey, good morning. I am in Delray Beach, Florida, with none other than Mr. Hector Garcia. We're just getting set up. You should see what we've got going on here, too. It's like a whole professional studio. Here, I'm going to take a picture. Hector, smile. Beautiful. We were able to book this meeting room literally at the last minute. All right, I'm going to start letting people in here. What's that?
Say something.
Testing 1, 2, 3. Testing, touching, tickling, torturing. You don't want me to keep going with words that begin with the letter T?
No, we're good.
Hello. All right, Hello, Matthew Fulton. My picture looks pretty crisp and clear. I'm very, very happy with my webcam today. Do you like me? Do you like me? Semi-live. We've got some people in the Zoom. All right, so I have something to share with everybody. This is really important. You guys ready for this?
I don't know.
We are live. It's Friday, February 7th, 2020 on Zoom In with Seth David and Hector Garcia and friends. Right? I'm very honored to have Hector. First of all, that Hector went out of his way, like you said, to drive an hour and a half just to be with me. Like, who wants to do that? But no, it's been a lot of fun. It's cool. It's cool knowing that, like, we know people everywhere we go. You know, like I just dropped a message on Facebook, said, hey, I'm going to be with my parents, and there's all these people who actually seem to want to hang out with me even a little. Although they're kind of dropping off a little bit. Like originally this morning we had I think 4 or 5 people, and then they all just, they just had better things to do, I guess, so it is what it is. I'm teasing, of course. But no, it's very cool. It's very cool, the community we have and how far reaching it is. And
I agree. Yeah.
I'm very proud to be here with my buddy Hector. I love this guy. I remember
Feelings mutual.
I remember when Hector approached me at maybe my second or third Sleater conference. And we hadn't met before. We'd talked. We had maybe emailed. And Hector was like, I remember you said something like, hey, I hope you don't mind. I'd put your videos up on my website. And I'm like, are you kidding? Why would I mind? It was flattering that, that you wanted to do that. And now, just for the record, Hector's YouTube channel has far surpassed my own. I have a little over 20,000 subscribers. What are you up to now? 60,000?
I don't count it. 68,510.
So this is great. This is a real pleasure, to be able to do this and sit here side by side with Hector. I'm just mad I didn't think of doing it sooner, like on a previous visit, but I'm really glad we're here.
Let's do it once a year. You come down, see your parents, and
Definitely.
We'll meet like this.
We'll start our own mini conference, right? The Sleater conference was started in Boca Raton, wasn't it?
I never went.
I think the first Sleater conference ever was in Boca Raton, Florida. I believe it was. I remember Doug telling the story about how the hotel's Wi-Fi went down during the conference. This was many, many, many years ago, of course. So
I can say that I'm super fortunate. When I got started 2.5 years ago, you two, for whatever reason, were the two that I came across. and I didn't realize how fortunate I was until a little later down the road. And I just want to say thank you to both of you, because you guys really got me where I am today. Honestly,
Wow.
I mean, I wouldn't be doing the work I am if it wasn't for the two of you and your generosity to be able to, like, Hector didn't even know me at all, and he's still on giving me, messages on Facebook and taking time for me at that time, and then I got to know Seth because he wrote an article about why QuickBooks was better than Xero. And I chose QuickBooks. That was why I chose QuickBooks when I started, was because of Seth's article he wrote. So anyway, I really want to just give a shout out to you guys both, because you're just so generous with your time and really care about the community. So thank you.
Thank you, Kelly.
No, thank you. Kind words. So what's the topic for today?
All right, so the topic of the day is how to handle that initial consult with the prospective client, right? And just to give you some sort of background and context, the impetus of this was I was in a Facebook group. A lot of you are in this Facebook group called Bookkeeping Side Hustle. It's run by my friend Kate, who actually Hector introduced me to. And she's been amazing. She's been an amazing friend, and she's actually the top referrer of signups for Bulletproof Bookkeeping with QuickBooks Online. I just sent her a very nice affiliate commission this month for all the referrals that she sent me. And she's great. And she's got this group called Bookkeeping Side Hustle. And there was somebody in the group who had posted, I don't know if it was a question, it's probably not really a question, but basically the message was that she had been sitting in, I guess, on a webinar. I don't know who it was, but some quote-unquote accounting guru had apparently said in this webinar that you should, I'm mixing up topics here, but it was like you shouldn't charge setup fees, and went as far as to say that if you're charging setup fees, it's taking advantage of the client and this and that. And she was very upset because she charges setup fees because she's new, and that got me thinking about, sort of in the bigger picture, that a lot of us, and by the way, that's the subject of next week's Bulletproof Bookkeeping webinar specifically, is should you charge a setup fee, and if so, how much? But today's was sort of inspired by the same thing, and the fact that we've had a lot of conversations in 97 and up and elsewhere about that initial consult and how it should go. And the thing that I think a lot of you know that sort of bugs me is when people start talking about, having a checklist. And I'm like, put your damn checklist away. Like, stop with the checklist. Just have a real organic conversation with the client. So that's kind of what I wanted to talk about. And on the way over here, Hector and I were talking. He said he's definitely got some thoughts to share. And then we can certainly touch on, do you charge for that initial consult, or how does that all work? But that's the topic of the day. And before I talk, because once I talk, that'll be the end of the hour, I want to give some other people a chance to talk. And I'd love to hear what some of you, think about this. Like, how do you, I have my own thoughts, as I've already said. To me, it should just be an organic conversation. And mostly the way I like to frame it is take the cotton out of your ears and put it in your mouth and just listen. Just let the client tell you what's going on. And you should be taking notes, copious notes, so that you don't miss a thing about and don't miss an opportunity in what they've shared with you about all the different ways you might be able to help them, right? You're basically giving them an opportunity to tell you what to offer them as a service, and then of course decide how much you want to charge for it. So before I go deeper into that, I'll shut up for now, because I'd like to hear from some of you about how you do handle the initial consultation and what you think. And if you have a checklist, tell us about the checklist. Even though I'll probably shame you for it, I want to know about it. I'm teasing, of course, but maybe we can start with Hector.
So your question is, do I use the checklist, or what do I think about using a checklist?
Broader than that, just how do you handle that initial consult with the client? I mean, if you use a checklist, then talk about that. But how do you handle that initial consult when somebody's set that call with you or whatever and said, hey, I want to find out about your services, and now you're on the phone or in a Zoom or however, and tell us how you do that part. I always do it in a Zoom. How do you,
Yeah. So I'm going to give you a sort of a two-part answer on this, because the way I did it when I first started my practice and the way I do it now is significantly different. Okay. I mean, for a lack of a better term, when you're a YouTube star, you have a little bit more power and leverage over that initial consultation, to the point where the client needs to pay in order to get on the phone with me. Period. This is not even a negotiable concept. So they are going to pay for the initial consultation, and they're not going to pay sort of a reduced rate. They're going to pay what already feels like what you pay to work with me already. So there's an inherent risk from the customer side to making that investment up front to be able to talk to me, just to figure out whether or not I'm a good fit to help them. And customers make the calculation on whether or not it's worth it to make that investment up front. And of course, with the YouTube channel, with reputation, with a blog, all that stuff really helps. So how I do it now might not be relevant to most people, maybe relevant to you, Seth, because I'm pretty sure you don't do a whole lot of free consultations anyway. But I'm going to go back to maybe like 6 years ago, 7 years ago, before I had a YouTube channel, once I knew what I was doing. Typically what I did was I told my leads that I'm able to do a 15-minute call, and this is how we scheduled it. And I made sure to let them know I have a hard stop. So if I made it at 1:15, I said, just so you know, I have a hard stop at 1:15. So before we meet, right, given the urgency of the fact that it's a very short time limit, you need to do your homework. So one of the things that I did was ask the prospect a couple of preliminary questions. So obviously, what industry you're in brings a lot of context, although it doesn't have all the answers. How many people touch QuickBooks? Sometimes that's even a more powerful question than how many bank accounts you have. Because I think a lot of us lead with the number of bank accounts, number of credit cards, number of transactions. And that in today's world is semi-irrelevant. I have clients that have 500 transactions a month, and everything's in American Express, everything's digital. Bank Feeds does everything in 5 minutes.
Right.
And I have clients with 20 transactions a month, and each transaction is a deposit with 17 checks for different customers that need to be applied to 17 different invoices. So the number of transactions to me is not even that relevant anymore.
I cringe when I hear people talking about the number of transactions. I absolutely cringe. I don't want to hear anybody talking about how many transactions are there. That's a bigger pet peeve than checklists for me. I never mention it because I don't hear it that much. But I agree with you, especially now.
On a tangential sidetrack, I'll make it really short. When we go to conferences and the vendors ask you how many clients you have, I also cringe at that question because it's such an irrelevant, empty question. It's so indicative of the times of social media where people are measured by their followers and that sort of thing. But anyway, so I need to make sure that the customer does some initial homework. Because if I'm going to give them 15 minutes, half an hour for free, whatever, I want to make sure they're committed to it. Because as you know, when a customer pays up front, the probabilities of them canceling that appointment is very low. But when they pay on the appointment date or afterwards, the probabilities of them canceling or having something else going on or not giving you top priority, it's really high. So what I want to do is create a high level of urgency about that consult. That consult should not be price exploration. Most of these prospects are doing price exploration. What they're trying to do is they're trying to figure out features, benefits, and price so they can do their calculation and decide, okay, this is a good value or not good value or whatever it happens to be. So I like to get away from that being the theme and the underlying ethos behind the meeting. And I like the customer to sort of be laser focused on answering the questions, on being honest, being transparent, and then also accepting when they can't answer the question, right? Because look, it's a really good question. I don't have that information. And that usually opens up a whole slew of benefits. But so the questions I ask up front in an email is, how many people touch your QuickBooks? What industry you're in, obviously what version of QuickBooks you're using, and I only use QuickBooks, so it's implied that they're using QuickBooks typically when they come to me. I typically ask if I had a magic wand and I could immediately fix a problem that you have with your accounting, what would that be, right? That way I go straight for the jugular, right? And typically when they answer back and they say, yeah, 3 people touch QuickBooks, I'm using QuickBooks Online, and then what I wish is, whatever they say, right? I wish I could run a report and trust it, right? So that provides the whole context of it. So now when I have a 15-minute call, I know exactly what I'm going to ask. So if it's an industry that I know and understand, I will ask industry-specific questions. So if they tell me it's manufacturing, I'll tell them, here, how do you put together your bill of materials? Do you include labor as part of your assembly process? Do you outsource your manufacturing? Do you do it in-house? Do you sell B2B, B2C? So I know what to ask, and I know the language to use so that customer says, this person was put on earth to help me. And if they give me some industry that I don't work with, nonprofits, a church, or whatever, I'm going to jump in and say, look, this is probably not going to be a good fit. I could give you some advice in terms of the technical buttons that we need to press wait, hold on, there's something with audio. Okay. So both our microphones are on, and that's going to cause this causing an audio issue. So I think you need to mute yourself while I talk.
I can cut down my input. That should help, I think. Or I can mute myself while Hector's talking. There we go.
Okay, let's try that again. Is that better? Is that better? Okay, sorry. Thank you for letting us know. So now I lost my train of thought. What was I saying?
What?
I lost my train of thought. Where was I?
You were talking.
Oh, the industry. Yeah. Sorry. So if they talk about an industry that I know I'm not good at, or I'm not going to be able to give a full breadth of advice to because I just don't do it, I will tell them up front that, hey, I probably won't be able to get far. But if your question is how to put together a financial statement after your banks is reconciled and your pain point is reconciliation, I could probably help you there. But I'm probably not going to be able to give you the full Hector. Okay, so that gives us initially one really good starting point there. Then the number of people that use it. So the context is if 3 people use it, typically there's a division of responsibilities. And the more people that use QuickBooks or whatever accounting system is, the more probabilities that something will go wrong. Now that could go the opposite side. When a company is big enough and they have 3 people using it, sometimes they have structure and they have a set of policies that says, you enter the bill, you approve it, you pay it, right? And that's nice. I mean, like companies that work that way typically are not so much in the small business world that we're in. But when they are that way, or at least when they're intentional about having a separation of powers or whatever, separation of duties, that's going to provide some interesting context in terms of, okay, so now you told me that you got 3 people using. So what you want from me is to train all 3 of you guys or gals on how to use it as if you're all one person, or would you like me to make 3 individual trainings or support or whatever to each person depending on the context of how they will be using QuickBooks? So if this person is only doing invoices, payments, and credit memos, I can concentrate on making sure that they nail that, and that person's never going to be reconciling. I don't spend too much time talking about reconciling or bank feeds, and then have someone else that maybe is only concerned with reports, and then I want to deep dive into, okay, what type of data you're trying to get out of QuickBooks. So the number of people that use the accounting software provides a lot of context, and I think not a lot of people focus on that.
Let me say something quickly on that, actually, because this is important, what you just touched on. Not only is it a good idea for the reasons you said, and I'm sure you're thinking this, but I want to make sure this is clear to everyone listening. When you lay it out that way, first of all, you're giving contextual training. If one of the purposes is separation of duties, then you may not even want the person who's paying the bills to know how to use the banking area in QuickBooks Online. You're going to set up different roles. We now have QuickBooks Online Advanced, which makes it even easier to do that. But so that's important in terms of the separation of duties. You'd want to separate the training accordingly. Plus, now it's probably going to mean more business for you. The client's going to need to pay you for more trainings because you're going to divide it up. But it's better for them. It's not like you're just trying to take more money away from the client. It's about giving the client good, dedicated service. Plus, now these recordings can be individualized, right? Because if we're doing it in Zoom in this day and age, I think everybody should be, so that you can provide the recording. And that way, each of the 3 people has their own recording, unique and specific to what they need to learn. The end, right?
I have a question about
Absolutely.
that. I just have a quick question about that is that I kind of have the mindset, and I just probably would manage differently than other people, that I would like people that are working for me to have a bigger picture. Like I think it's important for people to kind of know what the overall objective is, to make them feel like valued. At the same time, make it clear that, you stay in your lane, you do your thing. So what is your thought about having maybe an initial overall kind of, this is how QuickBooks works, and that, maybe it's too much for people, but that whole source and target thing, just so that they can problem solve better, even within their small area, to kind of understand the software and how it works, and to help them be more proactive in problem solving. So I don't know, what are your thoughts on that, as far as approaching it with that, at least in the beginning, kind of a high level overview of the product?
So great question, Kelly, and it's actually a perfect segue to the next question the next concept I was gonna talk about, which is, what if they come back and tell me, no, not 3 people are not using QuickBooks, only 1 person is using QuickBooks, and then I'm gonna ask how many total employees are there in the business, and then I try to get into the reasons why no one else is being trusted for, delegated to use QuickBooks and to actually execute that separation of powers. And that provides a whole another sort of Narnia, right? You open up that closet and there's a whole bunch of dynamics around the business and the trust inside that operation, trying to understand why are you not allowing your production manager or whatever to access QuickBooks, and then be able to talk about, separation of training and individual task-based training and that sort of thing. But to answer Kelly's question, which specifically is, what if, and Seth and I probably are culprit of this problem, we are jack of all trade educators, and it's difficult for us not to try to explain the big picture, not to try to communicate the value of understanding, okay, you only do invoices, but it's valuable for you to know how, when you receive a payment, whether you choose the bank account or undeposited funds, how that affects the entire workflow and ultimately affects how the business owners and the managers look at the report, trust the report, and trust the underlying work that specific person is doing. So I understand, Kelly, 100%, that I'm very much tempted to want to teach the big picture, to want them to get the holistic picture of what's going on. And in many ways, accounting makes a lot of sense to us, and we think that everyone should make the same sense in accounting as we do, and that ultimately could be our failure. Now, I think that the beauty of a consultant and accountant is that typically the second and the third year, it's really when you can start executing on those things, right? Because unfortunately, the way it works is the first year is about building trust, like trust me, I'll take care of you type of thing. Let me do all the things that you can't do or that are going to make it worse. The second year is about sort of expanding those capabilities, exploring into other apps, experimenting with them doing some of the work and we collaborating on the other end, and seeing, and like slowly giving away power to give it to the customer. And maybe by that third year, you could probably get to the point where, okay, so now let me show you what is it that we're doing here, what the overall big picture is, and how you get the full value out of the software by knowing A through Z. But as much as I want to, at the beginning, if your customer were to come to you and say, Hector, I want the big picture. I want to be almost like an internal accountant. I want to understand everything from A through Z, and I want all the team members to understand from A through Z. Then the follow-up question to that would be, all right, so do you have 2 hours a week for the next 8 weeks available for these people to not answer the phone, not answer emails, and concentrate on education, right? And do you also have $8,000 allocated for this type of training and consulting over the 8-week period? So if the answer is no to those, why even bother, fill your head with ideas of where you want to take that client if the client doesn't want to go there? But unfortunately, if you don't set the expectation up front, then what ends up happening is, you go with a target approach. I'm just going to show this person what they need to know and answer their specific question, but not show them the big picture. And then in the middle of your engagement, they'll go to another accountant or their CPA and say, yeah, I have this consultant helping me. They'll look at the books, and it's essentially not complete because you didn't do the complete work. You only did one part of the work. And then they start bad-mouthing or criticizing you, saying, why are you paying this person all this money? It's wrong anyway. So I understand both sides of the equation. But unfortunately, I spend $100,000 plus in university fees. I spend tons of hours of sacrificing sleep to learn my craft. I spend time in conferences and teaching and reading to learn what I learned. So I've made the commitment and the investment to know what I'm doing. And it looks easy when I do it. And to the customer, sometimes when they watch it work, it looks easy, and they don't realize, how much concentration, how much time, how much sacrifice they need to put in order to get to maybe a tenth of the way of where you are. So unfortunately, you kind of have to be very conscious of you're here, they're there, and for them to get here, they're going to have to make a serious, not just money, time investment and commitment. What do you think, Seth?
Yeah, 100%. And I think what you underscored there was how a lot of us have been saying lately, especially as we've moved to more of a value pricing model on things. And then the clients say, like, I love the way you put it, Hector, because the clients will look at us, or their prospective clients will look at us and they'll say, how many times do we get calls from people where they say, oh, this should be easy for you. And it's like, do you know why it's going to be easy for me? And that's when our response to that needs to be, yes, it is easy for me, but you're paying for the years, not the hours, right? You're paying for the years of blood, sweat, and tears that I've put into getting to the point where, yes, it's going to be easy for me. Do you all know the shipbuilder story that I've shared? I love this story that just underscores all of this perfectly, but I don't want to bore you with it if you've all heard it already.
I haven't heard.
Is everybody okay? So so there's a ship in a yard, a major ship, a cargo ship, and the engine's broken. It's not working, and it's costing the shipping company, tens of thousands of dollars, like every day or every week, that this ship is not in service. And they've called every engineer they have on staff. Nobody could figure out what's wrong with the ship. So they call this guy out of retirement. The guy had worked for that company for like 40 years or whatever, and he was the best engineer for ship engines, cargo ship engines, ever to live. And so they bring him in, and he comes into the room where they've got the engine, and he kind of taps around with a hammer and listens, and he walks around a little bit and taps with his hammer and listens some more. And, all told, he probably spent about a half an hour. And then finally, after tapping around some, he makes a few little tweaks, and boom, the engine fires right up. And they're like, oh, thank you. That's so amazing. You've saved us, tens of thousands in additional expense for not having the ship in operation. Please send us a bill. So he sends them a bill for $10,000. And they write back and they say, wow, $10,000, that's a lot of money. You were only here for like a half an hour, and all you did was tap around a few things, and boom, it was done. Can you itemize the bill for us? And he says, sure. And he sends them back, very quickly, a bill that says, tapping around the engine, $1. Knowing where to tap, $9,999, right? And that's the message, right? We know where to tap. We know what to do. We've got the experience, and I love that story because it just illustrates it so perfectly. And because we get that pushback from clients all the time.
I got an extended version of that story, if you don't mind. So I've heard that story in many ways, shape, or forms. The factory, a ship, and I kind of made this made up for me. I made this up because it also illustrates not only the power of what we do when we get to the client, but the power post. Okay, because there's two layers of value here. It's what you do to solve the immediate problem, and the value of you being there in the future for them. So my extended version of that story is the guy decides not to pay the bill. He calls his lawyers and says, hey, this guy is stiffing me. He's charging me $10,000 to tap around, and I'm not going to pay him. And then the lawyer, who's an advisor to him, asked him, let me ask you a question. I thought you told me that it took you 10 engineers to get to this guy, and this guy is like, he solved your problem in 30 minutes and you paid $10,000. What does it cost you for you not to pay them, break that relationship, and never have access to this person's skill set again? And then that person said, oh shit, you're right. If my operation stops again and I have to jump to 10 engineers to find the right one, now I broke this relationship with this guy, and this $10,000 is now costing me $100,000. So it's just kind of like to illustrate the point that it's not only you knowing how to solve the problem, it's you being there. And there's a lot of underlying post-service value that a lot of service providers don't focus on. And I think that's really an important piece. Like, I think that most people hire a CPA to prepare a tax return, not because the CPA knows a lot more than what TurboTax knows. It's the knowledge that if there's an audit, that CPA is going to be there to support them. And this is usually 2-3 years down the road. Even if the CPA discloses on the contract that the audit is not included, that I will charge you extra, but just having the knowledge that you are going to be there just in case something goes wrong, it's a huge, huge value booster. I think part of what makes Walmart, what made Walmart great is that it's not only that you go to Walmart because you buy something confident that you're buying at the cheapest price. I think a lot of it is something goes wrong, I could come back and return it. So a lot of people don't think about the post-service value and the consequences of on building a brand, not just around being a great problem solver, it's about being there for the customer afterwards. So in going back to the initial consultation, when you're having a conversation about what's your problem, what's your ailment, I want to prescribe the solution, or I'm gonna reconcile your books, clean up your books, do your tax return, whatever. What is that long-term value look like? What is that long-term expectation? What is that long-term peace of mind look like? Even if it's not a lifetime guarantee on the service, just you being there as a provider, you being alive. I have a lot of clients, quite frankly, that literally say, my CPA is old. and I'm looking for a younger CPA. Like, that's literally the reason. Like there's nothing wrong with it. As a matter of fact, the old CPA knows a lot more than me, has a lot more experience. There really is no real reason why they should switch to a younger CPA, but it's just that expectation that that person might, for the lack of a better term, not be available anymore, right, or retire or whatever, and having that anxiety that I'm working with someone that's probably not going to be for me in the future. It's a lot of underlying value. So I think it's something to think about that too.
So I think one of the things that, going back to like where you first started, Hector, is, going back to the question of, do I charge for that initial consult? I think you said it very well, is it comes down to supply and demand, honestly, as with anything really pricing wise, right? And what I really mean by that, if it's not obvious, is, like you said, Hector, if you're in a position where there's a lot of demand for what you offer because you have a YouTube channel with 60,000 subscribers, then you're going to be more inclined to want to charge for that initial consult, because you don't want to waste your time, and you don't want them to waste their own time. You want to make sure it's a good fit. And like you said, you want to make sure that they're very serious about it. But if you're just getting started out and you really need the business, then you might do the consultation for free. But I think it's important to drive home what you said just now, that in that consultation, if you the key to really kind of selling these clients on hiring you versus somebody else, right? And we talked about this recently. What's your unique selling proposition? It's going to come in what you can promise them is going to happen after they've signed on with you, right? One of the things that I know when I have prospects who are on the fence, and a lot of times I do because I charge a lot, and so they're considering them, it's a lot of money. And there's no question ever, at least the way they express it to me, about whether or not it's worth it. They're more concerned about, can they afford it, right? And really, can I afford it really translates to, do I see the value, right? And so a lot of times what pushes them over the edge is like you were just talking about, the after the fact support that I'm going to provide them. When it comes to selling the Bulletproof Bookkeeping course, it's the fact that they have the community where they can ask questions and I'll answer them within 24 hours. And I'll be very honest, I know that most people are going to use it a lot in the beginning and then it's going to taper off. So, because some people might say, well, aren't you going to get overwhelmed? You have 100 people signed up for that course. They're going to be bombarding you with questions. They don't. I have a newer guy now who signed up recently, and he's asking 3 or 4 questions every day, which is fine, though, because first of all, I actually like it because it keeps me thinking, and it gives rise to, like I was telling you on our way over here, I was talking with one of my relatives who was over for dinner last night, and he was a CPA in the profession for 40 years, and he made an interesting statement to me. He said, work begets more work, meaning the more you're talking to people, the more you're interacting, the more ideas spur, right? Like you said, and when you're talking to that prospect in that initial consultation, I think the more we can shut up and listen and just let the client go and let them vent, be a therapist for an hour or a half hour, 15 minutes or whatever it is. But the more we let them talk, the more we're going to get ideas for services that we can offer them, for how we can help them, and the more we can charge for all those different services we can offer.
All right, allow me to unpack a couple of things in that, because there's a lot of meat there, right? So we're going to break it down into little pieces. So you went back and talked about standard Keynesian economics, right? It's supply and demand. I've been studying Austrian economics and supply side economics, which is sort of the opposite of the Keynesian economics. And so generally speaking, most manufacturer service providers, they think about demand. Is there demand out there? Is there people out there that want my services? And they base the entire decision making based on fulfilling a demand. However, if you look at the most ultra successful people, right? The ultra successful companies, they don't care about demand. They only care about supply. What do I mean by that? I think Henry Ford was attributed to saying, if I had listened to my customers, I would have given them faster horses. Okay, so that's the point they're trying to make, is like, if you really want to have an impact in your profession and your industry, you got to forget about what customers are asking for. You almost have to design what your customers want before they ask for it. Perfect example is the iPhone. I was a big BlackBerry user. I used BlackBerry forever. The concept of not having hard keys on a phone, I thought was completely idiotic. When the iPhone came out, and I used to be a Mac hater, by the way, so I was on Seth's camp in that case. But the concept of making my hard keyboard go away, where I physically can feel where the keys are, and I knew how to type, just like a regular keyboard, you could type. That concept to me was idiotic. Like, what do I need such a big screen for? And so they developed something that no one was asking for, absolutely no one. And then they were forward thinking enough to prove that if you build it, they will come, right? You know, like the Kevin Costner movie, Field of Dreams. If you build it, there will come. So that's one of the things that I want you to think about, especially when you talk about the unique value proposition. If you are out there looking for the man, like if somebody were to tell you, there's a lot of e-commerce customers, go get them. You know, just because there's a lot of e-commerce customers doesn't mean that you need to go get them. What you need to do is think about what you're really good at, what you can shine at, what you can brag about, what you can with confidence do, what can you do in your sleep, what can you do with your eyes closed that comes really easily and comes out really good, and figure out how to scale that by focusing or having a unique positioning statement. And so the other part you were talking about is the fact that you have a community and people ask you questions, and that gives you ideas for more services. One of the things that we need to do as a profession is to, although bespoke custom services are good, we also need to think about productizing a little bit, right? Because in order for you to have a bit more freedom as a professional, you need to have some income that's sort of semi-passive, and that should sustain you, and then have the other income, which is the sort of the cream in the top, which is that custom one-on-one consulting, problem-solving type of thing. Because the problem is, if you do too much of the productizing, then you lose it a little bit. You lose your edge because you're not doing custom work. And if you do all custom work, it's all dependent on you. It's all dependent on your time, on your calendar. So you need to find a mixture between the two. And then, one of the things I learned about building a community, having a Facebook group, having a webinar series, just like you, and answering questions is, all of a sudden when you see a pattern of people asking the same question, you're like, wait a second, I'm a creator, I write, I do videos. If I got 3 people asking the same question in 1 week, there's an underlying problem with my writing, my videos that didn't cover that or created some additional confusion that made those questions rise to the top. And or that was your research and development department letting you know what is the type of content that you can create and answer that question proactively. The challenge that we have is that we think that our knowledge, what we know, our capacity to solve, it's the only edge that we have. And if we give it away, we lose it. And I heard this from you, and I think you attributed some, right? You give it away to keep it. When you said that, it really made me think. Like, I think of the value of knowledge is like the value of money in many ways. So if you have $100 bill in your pocket, that's just a piece of paper. There's absolutely no value on the $100 bill in your pocket. When does the $100 bill become valuable? Really, like at what point does the value of the $100 bill manifest itself?
When you exchange it for something.
When you spend it, correct? Same thing happens with knowledge. If we have all this knowledge bottled in our head and we're not using it, we're not utilizing it, what the hell is the point, right? And if we're only using it with a customer that paid us, taking a risk, knowing whether or not we have the knowledge to help them, then you're using it in a very limited way. But when you give it away, you own it, right? Because in many ways, when I give away a QuickBooks trick or something, and it's the first time somebody's seen it, doesn't matter whether I stole it from someone, that becomes Hector's trick, right? Or that becomes Seth's trick. So I think that's another important point. So when you have this initial consultation, so going back to the initial consultation and the checklist, when you have the initial consultation, I think you should have an internal checklist around understanding what is the intent of the call and what you want to get out of it, and make sure that you kind of check them off in your head. But don't have an exposed checklist that makes it very mechanical, that doesn't allow the creative juices or the happy accident. Like Bob Ross says, it's a happy accident, right? So when you're exploring and you're discovering, if you're going by a specific checklist and you have to ask the 10 questions in 15 minutes, and basically you don't listen to the answer, basically all you're doing is waiting for the empty silence to ask the next question, then you lose the magic of conversation. So it's those happy accidents when you're improvising and doing the discovery that generally bring the most value. And look, innovation is about being surprised, right? If you're meeting with your client, if there's no surprise, if you think you know the answer to every question, because most of the times we do, right? Like we look at a financial statement and people are telling you what they're worried about, and you know what the issue is. The banks are not reconciled, things are being unclassified, they're putting things in uncategorized asset, whatever. You know what it is, and you're sort of diagnosing the problem without listening to the customer's concern. You lose that potential. I had no idea your perspective about accounting was this specific thing. And if I were able to solve that problem or alleviate that problem, I would bring values in areas that I didn't know I could bring value. Sometimes we're stuck that we only bring value when our banks are reconciled. We only bring value when the financial statements are done. We only bring value when they're compliant. And as an accountant, we have a myopic point of view, and we were educated that that's our job, that's our work. And therefore, if we do our work really well, therefore we are valuable, therefore we bring value. But sometimes if we fail to understand from their perspective what they value, you fail to really bring the value, right? You fail to, or potentially be able to create the value. Sometimes what your clients value, it's not that you reconcile the banks or do the tax return, they just value you being there, or they just value trusting. Like, think about the value of trust. Like, think about how powerful is just trust, you know? Like, you trusted me to come pick you up to make your morning. And you also trust me not to drive like a maniac and kill you in the highway. And then I trust you that I'm coming in your show and you're not gonna, whatever, say something that's gonna mess me up or whatever. So think about just having trust, it just basically creates the platform to build whatever you want. So that's something to, again, trying to unpack a little bit and thinking about, all the things that you said. And when it comes back to the whole checklist and initial consult part. But I'll add one more thing before you jump in, is if you're currently not charging for the initial consultation, for whatever reason, customers don't want to pay, you can't bring yourself to charge, you really want the potential customer, you have the time and therefore you prefer to bring on the opportunity, or maybe you're just learning right now and you think that talking to more people will give you more exposure. If you're not charging, you're missing the opportunity to make that initial consult valuable. Because unfortunately, when people don't pay, the probabilities are they're just not going to value it. So if you can't charge right now, think about what can you do to be able to charge, whether it's marketing, specializing, creating content, or giving something in the initial. Is there something you can give away or guarantee that they get? Some little piece of value in that initial consultation that you could charge for it? I think I would go do it. And the easiest way to do it is say, we charge for consultation, but the entire amount you pay for gets credited towards the job. That's sort of the best halfway in between, because people are prepaying for your services, they're taking a risk, but if they go with you, they already paid a piece anyway. So, and you tell them up front, that's the risk you take. The risk you take is that you're paying me $200 or whatever to determine whether I'm a good person to work with you. And that is your risk. I understand that. And I'm clearly leaving it out in the open. But then my risk is that now if I do the job, I've basically, I can't charge the full amount because I already got paid for the consultation. So I think that's somewhere in between. So that's a long answer to your question you never asked.
Quick question, Hector. So do you think you would have gone that route when you first started out? Do you think you would have charged for the initial consultation then?
So if the question is, if I was able to go back in time and talk to a younger self, I would say absolutely I would have.
Really?
But I didn't have the chronological context, right? I didn't have the experience to be able to know that I'm valuable. Like unfortunately, it took $1 million or whatever it is that I've charged over the years for the last 12 years. It took $1 million worth of billings to then realize that I'm valuable. And I was valuable from the beginning. Now, granted, I was less valuable then. But even if I was charging $25 or $50, if I go back to all the initial consults that didn't go anywhere, partly because the customer showed up late or they didn't show up or they didn't do their homework. Because one of the things that pissed me off is like you're meeting with a client and you're asking, what version of QuickBooks you have? And they're like, I don't know. It's like, dude, isn't that like basic stuff that you should, even if you don't know, I understand that you should come to the table with, or what do you want out of this? Or, what's the last tax return you filed? Or, even asking a question like, what were your profits last year? Oh, I don't know. My tax return, my accountant has it. I didn't even ask for it. So it's very difficult to have a consultation without a little bit of the numbers, a little bit of the facts. And if the customer doesn't do their homework, they're not all in, right? They're price shopping, or they're trying to check something off their checklist. and trying to figure out what's the lowest price I can pay to check that off my checklist. And I live my life very intentional. Every one of my customers, I work with it as if it was my only customer, although it's only an hour, 2 hours. And I bring a lot of passion into this. And even to this, we're just hanging out. I bring in passion to every moment of my life. And, does the customer deserve all that passion and all that focus from me if they're not going to do it? Now, I can't change them fundamentally, but typically when you put a price tag on it, something psychologically does where you tend to value it more if you pay for it. So I would say, Courtney, if right now, whatever in the stage that you are, whether you charge $1, it doesn't matter. I mean, there's a great book by Peter Thiel called 0 to 1. Have you read that book? It's a really cool book. 0 to 1. In the book somewhere sprinkled, he says it's a lot harder to get a customer to go from paying 0 from then to paying 1 than to getting a customer from paying 1 to paying 100. And it's so counterintuitive, right? Because the difference is $1.99. The difference is a paying customer is a different category than a non-paying customer. So.
And that's why, by the way, if you study marketing funnels, that's the exact philosophy behind it is first you get them to spend a little bit. You get them to do, the free giveaway. They do the free giveaway usually, but then immediately you're getting them to spend maybe like $37 on something. And then you move them up to something that's around $100, and then you go to $300, and you're working them up a value ladder that ultimately gets them to where you really want them, which is going to be your highest level, highest paying, probably most advisory level service, where they might be paying $1,000, $1,500, even $2,500 a month, for that kind of strategic advisory type service.
And that's how I got into Mac. I bought an iPad first because I have a 2-year-old, and 2-year-olds have to use iPads. And then afterwards I got a MacBook Air, and then afterwards I got an iPhone. Now I have a laptop, a PC. A full computer. I spent $10,000 in Apple already in baby steps. So I have 2 sets of AirPods. Again, I'm an idiot when it comes to spending too much money in Apple. I get it, but that's how they got me. They get you one at a time, and you build loyalty that way. And sometimes you're a brand new customer. Sometimes the customer is not ready to buy from you right there and then. Sometimes it's best to take the customer a year from now when they're making money and they can pay you $500 a month. That's starting now at $100 a month. It'll be very difficult for you to get them to $500. So it works both ways. But sometimes it's best to just sell them an information product, sell them an ebook, sell them maybe a video, or sell them something. Get them to pay $30. Get yourself in their vendor list, right? Put your company in their vendor list. Doesn't matter how you did it, put it in there. You're officially a vendor to them. And then when the time is right, they'll buy from you what you want to sell them.
And actually, on the other side of that, I would say the key is to get them onto your list of people that you can get in touch with, right? I recently shared this, and it's not my original thought. I learned it elsewhere, that if you have your whole business built on YouTube, or your whole business is built on your Facebook page, or somewhere on a property that doesn't belong to you, you don't own your business. YouTube owns your business, Facebook owns your business, and as Hector has experienced directly twice, they can shut you down, and now you've lost all access to those customers, right? So that's why I'm so hard on making sure that you build that email list, that you get those people into your own ecosystem, which is what I've begun to build for a little over a year now with Kajabi, is really building that list that they can all shut me down, and I still have direct access to all of my community, all of my customers, so to speak, or would-be customers. One of the things I love that really underscores a few things that you said, Hector, is, I've been studying a lot of Jay Abraham stuff lately. Genius marketing guy. Got to get the book, Getting Everything You Want with Everything You've Got. It's something like that. And he shares a story that underscores a lot of this, where, this guy is getting his son a bike, and it's going to be his son's first bicycle, right? And you talked about like building trust, right? So the guy goes into the bicycle store and he talks to a guy at the store, and he explains to the guy, hey, I'm getting a bike for my son. It's going to be his first bike. He hasn't even learned to ride yet. This is how he's going to learn to ride. And the guy is thinking about it and saying to himself, this guy's very excited about this. I'm not just selling this guy a bicycle. I'm selling him a memory, an experience that every father looks forward to having. And so he starts thinking that way, and he says, do I want this customer right now? I can take advantage of his excitement and sell him the most expensive bike in the store, and he'll probably buy it. He said, or what I can do is I can approach this guy and I can say, look, this is your son's first bike. He's probably going to fall. He's probably going to damage the bike. You don't need the most expensive bike in the store. Let's get something a little lower end that he can learn on, something that's safe. And then when he learns to ride, you can come back. And so guess what he's done? He's won a customer for life instead of getting a one-time sale. He makes a little bit less money today, but now the guy's going to come back and get another bike for himself, for his wife, for his daughter, and everybody else in his family, because that guy just built a ton of trust, which you talked about the value of trust. There is no value on trust. It's invaluable, right? There's no limit to the value of trust, and that's how you build trust with somebody, is you make it clear that you're acting in their interests and not your own. You're putting their interests ahead of yours. And by the way, because of the world we live in, unfortunate as it might be, that's going to give you an edge, right? Because most people don't think that way. Most people think, I need to get the sale, I have bills to pay, and they're thinking all about themselves. And the reality is that initial consult should be about not just finding out what they need in terms of their balance sheet. It should be about this. Another thing I love the way Jay Abraham describes it, what does every business owner want to be able to do when they're talking to their colleagues, when they're out at dinner or coffee or at a conference? They want to be able to brag to their friends about how amazing their CPA or their bookkeeper is. What an amazing job they do, right? So you want to think in terms of how can I impress upon them that when they work with me, they're going to be excited to brag about me because I'm going to make them look smart. Right? That's what we all really want. We all want to look smart in front of our colleagues. We want to look good. So our job as the accountants and bookkeepers is to think, how can I make my client look good when he wants to go bragging to his friends and colleagues about what an amazing accounting resource he found and how smart he was to maybe spend the extra money because I've got somebody who's really in my corner, who really has my back, and look at all of these amazing things that he or she does for me. And holy cow, I would have paid twice as much for what I get.
Yeah, one of the things I'd like to add to that is, in our profession specifically, different than anything else, right? There's tons of professionals, tons of services or products out there, but very little ones have to do with your money, right? I mean, there's your banker, your accountant, and your financial advisor. Really, no one else is really touching your money. You could argue lawyers protect your money, but they take more than what they protected, in my experience. We're in a unique situation in which we are looking at the client's numbers, we're understanding what they're able to produce, and if we can somehow think beyond, like, I know reconciling a bank account is important. I know hindsight, it's important. It's important to know whether you made money or not. It's important to the IRS. It's important to the bank. But in reality, I don't think any business owner ever, runs a business thinking what I made in the past should be indicative of my future, right? So bringing someone really accurate information of what happened is really not that valuable, right? The valuable piece is, could you influence me to make a better decision that is going to have a positive impact to my bottom line? Could you influence me to make a better decision that will make my business more valuable when I sell it? Could you influence me to make a better decision that would allow me to be bankable and get a 5% loan so I can grow instead of going to a loan shark, QuickBooks Capital, going to a loan shark, paying 12, 16, 15%, right? You got all these companies, Lettuce, and what's the name of the one with the K? Cabbage.
Fundera will source you to every lender.
And it's great to have access to funds. I get it. But the problem is these funds are really expensive. And typically, if you don't have a profitable business, a reputable business, good credit, you're going to be paying 12, 13, 15%. And some of our businesses run at a less than a 15% gross profit. So what the hell is the point of getting a 15% loan if you can't really produce more than 15% in your bottom line? So the value that you have, it's just getting your client bankable so they can get access to funds for cheap, and they can get low cost of capital so they can invest it back into marketing or whatever. Same thing with ultimately selling the business. Like some companies don't have an exit plan and they just run their business and live day by day. But a lot of my clients, they're in their 50s, they're in their 60s, they're thinking, my kids are not taking over this business. I want to sell this thing. I don't want to run this thing like a piggy bank anymore. I'm a good accountant, an objective accountant that's going to be a hard ass about, me using my money the way I'm supposed to be using it. It's going to allow me to paint a financial picture to the potential buyer of the business that will see the same value that I see, right? Because the problem is most of the value in a business is sitting in somebody's head, right? It's the potential, right? A lot of people think about the potential, and what an accountant can do, one of the most valuable things an accountant can do is help the business owner organize in such a way that their business can literally be translated and moved to another business owner. As long as you run it in the same set of procedures, you can output the same numbers. And if you can raise the level of confidence that an outside person has in that business because the books are so good, the accounting is so good, the structures are good, you could double, triple the value of that client's business. But if you don't have a conversation about what the customers want in the long term of that business, and you don't get them to say, in 20 years, I want to sell this thing, or I want to grow and I want to buy a building, or if you don't get them to talk about 5 years from now, 10 years from now, it's hard for you to have the conversation about what can I do long term, not just now, not just clean up the books, but what can I do long term that allows me to charge as if I was a partner in your business. Now I'm charging 10% of what you're making or whatever because I'm your partner. Like literally, I take more than 10% credit for your growth and I'm only taking a 10% cut. That's a good deal. It's a good value.
Yeah, what I love about what you just underscored is, and we'll wrap up with this. The real, let's face it, what does everybody want? What does every client want? No matter who they are, no matter where they're coming from, just very broad, big picture. And we talk about this a lot in 97 and up, because I've learned this from a number of places and it's been pounded into me, especially in the last year or two, is they want to feel safe. They want security, right? What does that security look like? Bottom line, honestly, probably cash in the bank, right? So a lot of us focus on, the first thing we do, and I say it myself, we beat the hell out of the balance sheet and get that cleaned up. Because when that's cleaned up, we know everything else kind of falls into place. But then the next thing is to go through and start really analyzing the P&L, right? And we look at where can we take advantage, where are there holes in the P&L? Where are they not being efficient? Where are they not, how can we make them more profitable, right? Because that's where you can start to add immediate value, is increasing their profitability, like you were just talking about, Hector, and breaking it down specifically. We can start by trying to increase sales, right? 3 ways to increase sales: bring in more clients, increase your prices, maybe hard to do, or increase the number of times a customer buys from you, right? That's the critical one right there, is how do I go back to existing customers and get them to buy again and again? Like you described Apple did with you. They got you to buy from them over and over again, climbing up the value ladder all along the way. Then we look at cost of goods sold in a business. How do we reduce cost of goods sold to increase gross profit? Then how do we cut back on expenses? There are lots of ways we can cut through the P&L and figure out how to make them more profitable, but that's not enough. It can't stop there. That's where most of us stop, and that's the problem. Where we need to go on to is, once we make them more profitable, now how do we build those cash reserves? That's going to be the real security blanket that every client wants. That's what I want for my own self and my own businesses. I want cash in the bank because that provides me with the comfort that if I wanted to, if business took a spill for a month or two, I'm still okay. And I have time to recover from whatever it might have been that caused, a lull in my revenue curve for whatever reason, right? All right, we're going to let everybody go. Thank you so much for joining with us today. Thanks, Hector. This was great. Good seeing you. And we'll be back next week with another fantastic Zoom, once again broadcasting live from beautiful downtown Burbank, California. And I want to give a shout out to Capital One Cafes. If you have a Capital One Cafe near you, you've got to check these places. This place is awesome. I've been wanting to go to the one near me. Lo and behold, here I am visiting my parents. They happen to have one here, and here we are. And this place is awesome. So shout out to Capital One Cafe, and thanks for the use of their room today.
All right.
I'll see you all.